In today's discussion, we're diving into a major economic shift that could see billions or possibly even trillions of dollars flowing into XRP, particularly from the European Union and its banking systems. This isn't just speculation, it's grounded in current macroeconomic moves and monetary policies. A significant part of this transformation is tied to interest rates, and recent actions taken by the European Central Bank, ECB. To understand what's unfolding, we need to look at the broader context, including US politics and global financial competition. Former President Donald Trump has been openly critical of Jerome Powell, the chairman of the Federal Reserve, accusing him of making decisions that could put the US economy at a disadvantage on the global stage. Trump's concerns center around the idea that the EU and other major players like China are taking aggressive steps to boost their own economic power, partly by lowering interest rates and injecting liquidity into their systems. The ECB, for instance, recently slashed its rates by 25 basis points, and projections suggest it could cut rates by as much as 1.5% to 2% more by the end of 2025. Lower interest rates make borrowing cheaper and increase the amount of money circulating in the economy, which typically leads to a rise in investment, including in cryptocurrencies like XRP. Historically, whenever the money supply has expanded, digital assets have seen notable growth, although there's usually a delay of a couple of months. This pattern suggests that XRP could be poised for a major rally following these policy changes. The initial rate cut alone is estimated to inject $100 to $300 billion into the global money supply by 2025. Depending on market reactions and confidence. However, with additional rate cuts potentially on the way, total liquidity added could balloon up to $3 trillion just from the European Union. This influx of capital often finds its way into cryptocurrencies due to their nature as alternative stores of value and mediums of exchange, especially during periods of economic uncertainty or monetary easing. Meanwhile, although the U.S. economy is still significantly larger, the Federal Reserve under Powell is also eyeing potential rate cuts, with 2 more expected this year. This means that, while the EU is leading the charge in loosening monetary policy, the US may soon follow, further accelerating the global trend toward increased liquidity and potential gains in the crypto markets, particularly for assets like XRP. Donald Trump is currently pushing hard for a reduction in interest rates, believing now is the ideal time to stimulate the economy, while Federal Reserve Chairman Jerome Powell is more cautious, suggesting that waiting a bit longer would be wiser. The debate centers on timing, but the overall direction seems clear: rate cuts are coming. A 50 basis point rate cut, which the US has already used several times, can inject between $200 billion and $500 billion into the economy over 6 to 12 months. That's a massive influx of capital, especially when considering the scale of the US economy. It enables more government spending, more mortgage lending, and increased investments in sectors like cryptocurrency, including Bitcoin. It also provides vital support to the banking sector, which is currently under considerable pressure. But this is just the beginning. The US isn't planning a one-time rate cut, but potentially 2, 3, or even 4 reductions. If all 4 happen, that could mean an injection of as much as $2 trillion into the economy. And globally, the trend is similar. The European Union is planning even more aggressive cuts, potentially up to 2 full basis points, which could result in a negation $1.3 trillion to a negation $3.8 trillion entering the market from Europe alone. Combine this with the fact that global cash reserves currently top $10 trillion. And the impact becomes staggering. Such large inflows don't just increase asset prices by the amount of money added, they have exponential effects, triggering further growth as liquidity drives up demand and valuation multiples expand. Looking at monetary data like M2 and M3, we see they're already climbing sharply, and history tells us that within 6 to 12 months of increased money supply, markets typically respond with significant price increases. With the US poised to lower rates, the EU already moving in that direction, and major economies like China likely to follow with trillions more in stimulus, The global economy is preparing for a tidal wave of liquidity. This makes Trump's frustration with Powell more understandably. Trump sees this as a critical moment and believes delays could do real damage, especially in light of trade tensions and tariff-induced inflation. He wants immediate action to avoid economic downturn and restore growth momentum. This matters not just for traditional markets, but for crypto too. Take XRP, for example. During the last bull run from 2020 to 2021, it was clear that increased money supply led to a surge in crypto prices. If the same pattern repeats, and all indicators suggest it will, we could see a strong upward movement in XRP and other digital assets within 6 to 12 months of these rate cuts. With trillions in new money entering the system, the potential for massive growth across all markets, including crypto, is substantial.